What is driving these markets then? Give us a sense of why we are here.
Yeah, so you mentioned it right there, is the perennial hunt for yield that has really accelerated this year as so much liquidity in the market has depressed returns elsewhere. So the relative value of these products, they do pay a premium than traditional bonds because they're a little bit more complex. So their relative value is appealing. But also, if you look at the underlying assets of these businesses, either you're talking fried chicken or gym fees, these are businesses that are exposed to the consumer. And according to Goldman Sachs, the consumer stands to benefit in an inflationary environment because wages go up and the prices of their most treasured possessions like homes and cars also go up.
Okay, Mark, jump in.
Good morning, Tatiana. CLOs have become the largest part of the market, seeing a record year again this year. What's the outlook for 2022?
Well, you know, Mark, so far analysts have come out pretty bullish on next year, forecasting another record or near record year. We're talking about 13 to 40 billion euros here in Europe, but it remains to be seen if it will stay economical for managers to do these deals. So far, the deals that I've seen this week have seen some price widening there. So it remains to be seen whether that or the virus news derailed the market. But I can tell you from my reporting that there's a lot of bankers and managers out there who are working on deals and want to get those off the books as soon as they can.
Yeah, this is interesting. So are these businesses, the underlying assets we're talking about here, the underlying debt, are these being extended to businesses that have had to go into debt because of the pandemic and have struggled? Higher sales for this kind of product means investors are taking on more risky debt. Is anybody nervous about where this debt is landing?
Exactly, Anna. Well, yes, regulators are nervous and they've been sounding alarms. We've heard from the BOE in its latest financial stability report warning about the loosening standards and the underwriting standards that have gotten so weak in Europe. And we do have a chart to show you based on our Bloomberg data that investor protections or deals that lack investor protections have surged this year to a record, at least to the data that Bloomberg is tracking. So, but when you talk to investors, they're not really concerned about that because they see a default rate environment that's pretty benign here in Europe. So for now, investors are not concerned about defaults. Well, it remains to be seen how that changes.
It's interesting on that chart. So you're talking there about the covenant light assets. It's interesting how we've seen a lot of growth in that pre-pandemic, didn't we? So this was to some extent a pre-pandemic story, but then as debt became the solution to troubled businesses during the pandemic, just adding to that tension. Tatiana, thank you very much. Thanks for bringing us the story.